Hello and welcome everybody, it's Stephen and I'm a popular investor on the Etoro platform. Welcome to all my subscribers on this YouTube channel and everybody from Etoro. So today I'm going to be doing a video which is based upon my performance for April, while also talking about how things went in the market this week. So I'm going to be kind of combining both of those videos because it fell on the weekend. So just before I get started, if you could please subscribe to my channel and like my video. This would really help me spread my reach and get my message to more people. So let's move on to how we did for this week. So we actually did really well this week and over the whole course of the month. So over the month, we actually finished the month over 14% up. So that's 7 months in a row in profit. This is an achievement I am really proud of. And if we compare that to how the rest of the indexes did this month, the S&P did about 4%, whereas the Nasdaq did about 3.58% for the month. Of course, I have quite a bit of crypto as well in my portfolio, but actually overall as a whole, Bitcoin was actually down about 3% for the month. So overall, my portfolio did really well and kind of outperformed the market. So it's something I'm really pleased about. I'm really hoping we can get to 8 months in a row profit, because that will be a real achievement for you all. So, right, let's talk about what happened in the markets this week. So there was a lot of kind of good data coming out of the US. So again, unemployment went down again to a pre-pandemic high. So that's really good, and obviously manufacturing has also increased considerably as well. Also, there was some really good news from some states in the US, such as New York, and they agreed to the mayor of New York agreed to open up some of those restrictions that had been in place in May and kind of open up the city again, which was really good for economic activity moving forward. Also, the Americans have done very well in the vaccination program and the way it's been rolled out. And also they've done something really good this week as well, where they've agreed to send some of the COVID vaccination supplies to countries that kind of need them quite greatly, such as we've seen a lot of issues in India. So that's been done through donating some of the Pfizer vaccine. So that's really great news. This week has also seen lots of earning reports from many companies, especially those in the technology sector. So there were some very good results from the social media giants such as Facebook and Twitter, but slightly less great results for Microsoft and Netflix, which have seen their share price decrease slightly for the week. However, I think they're very strong businesses. I hold Netflix in our portfolio. I think that there's going to be, obviously everybody has been watching Netflix for the last 15-16 months. There was obviously going to be a period where new users might drop off slightly and less people were going to be watching Netflix as the economy starts to open. But I think this will have some type of novelty effect, and the longer that it stays, then I think most people are going to start tuning into Netflix again and watching, and lots of new films and programs that had been postponed will be put in place, and many people want to watch those. So I'm not super worried about Netflix. I think it's just a rotation into stocks that have been affected by COVID. Generally, the US economy is starting to move in the right direction. Especially kind of in the hospitality, leisure, travel sector and retail. I think that this is really kind of good for the economy moving forward. But there are some concerns that the faster that the economy kind of roars back and starts to get going, that they may start to increase interest rates. However, this was kind of quelled this week by J.𝗵𝗂 Powell, which is the head of the Fed, who has said that they don't plan to increase interest rates anytime soon. So that hopefully should have kind of calmed down the market slightly. If we move across to Europe now, things are looking slightly better. The vaccination program is starting to be rolled out, and across Europe, they've actually managed to administer 133 million doses of the coronavirus vaccine. And also they've managed to secure this week, the EU have secured a 1.6 billion doses of the coronavirus vaccine from Pfizer, which should really add to the supplies and hopefully speed up the administering of the COVID vaccination. There's also been good news from France, where President Macron has announced that they plan to lift COVID restrictions in May, which will be good for the French economy moving forward, and the rest of Europe hopefully should follow suit quite soon. The UK has already opened up partial of its business activities. Expect to further reduce the restrictions in May. So things are generally looking a lot brighter. We have also seen that China has implemented new internet regulations for up to 14 different companies operating in China. We saw a few weeks ago that Alibaba were giving a pretty large fine. And now the Chinese government are trying to be a little bit stricter in terms of anti-competition regulations. So they've also administered those. So in addition to that, they're also talking with other companies that are involved in e-commerce and internet-based activities, such as JD.com this week as well. So it's very clear that they're trying to make the regulations a little bit stricter. However, I think that this could be good because I think that the regulations before were a little bit cloudy and there was quite a lot of room for interpretation. So by nailing down those regulations, at least the Chinese companies know what framework they're trying to fit into. As we move on to the 5 best performing stocks of April, and the best performing stock for April is a company called 𝗟𝗚, which is a banking and insurance company based in the US, and they've done really well this month and have actually achieved over 10% growth for the month, which is actually great. And they've seen a lot of tailwinds and increase in the book of business in the auto insurance sector. And I can see 𝗟𝗚 going from strength to strength, and it's something that I hold in my portfolio for the long term. Second best performing stock in my portfolio, which I've done an analysis report on very recently, is a company called Norilsk Nickel Mining Company, which is a Russian mining company which is based on the UK stock exchange. They've actually had a really great month, and a big reason why I'm extremely bullish on Norilsk is because I think that it's a great play on the future transition to EV cars. As many of you will know, nickel is a vital component in EV cars, and there is a lot of shortage of nickel in the market. So I think that this stock will continue to go well, and you don't have to choose who is going to be the winner in the EV car race, which is a really great bonus. The third best performing stock in my portfolio is the giant Amazon. Amazon have gone from strength to strength in this pandemic, and I think we'd already seen a shift to online shopping, but I think this COVID pandemic that we've had has actually accelerated this many years forward of what it would be without COVID. I can see Amazon going from strength to strength, and it plays an important part in my portfolio. The fourth best performing stock in my portfolio is a company called Wix, which has grown by over 8% in April. Again, this is another vital component in the kind of COVID-19 era, where many different people wanted to create easy websites, and they have really seen a lot of tailwinds to do with that. So I think again, another stock that I'm pretty bullish on. Fifth best performing stock in my portfolio is a company called Raytheon, which is a defense company, and they've done really well recently. As I said in a previous video, they've recently won a government contract, which is going to be very important to their future growth. So that's another stock that I am bullish on long term. So that concludes my 5 best performing stocks of April. If we talk about crypto now, crypto generally in the month of April has done pretty well. However, what we have seen is a slight change in the dynamic, and this is something which I have witnessed previously before in other bull market cycles. I think what happens at the beginning of a cycle, you see quite a lot of growth from Bitcoin, and then you see some growth from other altcoins. But as the cycle progresses, the altcoins start to outpace Bitcoin. And it doesn't mean that Bitcoin's not going to continue to grow. And some of those lofty targets that many people are saying are, will not happen. I personally believe that it's got a lot of growth left in it. But I think what you will see is you will see the Bitcoin dominance. So the Bitcoin dominance is the difference between the market cap of Bitcoin compared with all the other altcoins on the market. So right now, for the first time, it's actually gone below 50%. And this is quite a kind of crucial period in the cycle. I think what we're going to see is a further acceleration of altcoins over the next couple of months. And I expect that Bitcoin dominance to reduce over the next couple of months. So I think that this is a really exciting time, but it doesn't mean that I'm going to pile into altcoins. And the reason why is because I think I have a very healthy portfolio of both Bitcoin and altcoins. And I think I will continue with my disciplined strategy of reducing the crypto weightage in my portfolio as the price goes up. I think that this is sensible portfolio management, and I will diversify some of those profits into other areas such as stocks and ETFs. So all in all, I'm still very bullish on what's happening with crypto. We're still seeing really great news around the place, from hedge funds to insurance funds, and also public and private companies putting Bitcoin on its balance sheet. So I expect that to continue. There was a little bit of a sell-off this week with some of the announcement from Tesla that they had reduced some of their crypto holdings that they'd bought a few months ago at 1.5 billion worth of Bitcoin. I think that you're going to have to know that this is pretty normal. This isn't a sign that Tesla are not bullish on Bitcoin. Actually, to the contrary, they've actually accepting payments of Bitcoin, and they've said that they're not going to convert that Bitcoin into fiat. So they're very bullish. One of Elon Musk's explanations behind why they sold a small stake of Bitcoin is that they wanted to prove to the market that there was enough liquidity for them to be able to sell off large holdings of Bitcoin. I don't think that they plan to do this more in the future, but I think we have to know that the market dynamic has changed a bit. There will be a lot of interest from institutional buyers, but just like hedge funds do every quarter with their holdings, they trim positions, they reposition their portfolios, and you're going to see some repositioning at the end of quarters in terms of crypto holdings. So, be prepared slightly for a different dynamic, but the important thing is that the prices continue to go up and to the right over the long term, but we may see some short-term volatility. And if we see some short-term volatility, I will continue to trade that to try and dampen the effects and lower the drawdowns. We are also seeing a lot going on in the DeFi space. So for you that don't know what DeFi is, it stands for decentralized finance. And we are seeing a big rise recently with Ethereum and also with BNB, which is the Binance coin. And a lot of the reasons to do with this is the acceleration of decentralized finance, in which both chains, both the Binance chain and the Ethereum chain, are really concentrating on, and they're making really great inroads to it. So I expect those two coins to continue to rise, and I'm very happy to have them in my portfolio. That being said, as we hit all-time highs, I'm going to slowly trim those positions. Many of you may also want to know about a new trade that I have put in my portfolio. Most of you know that I am mostly a long investor, so I bet that stocks, indexes, commodities will go up in value. However, from time to time, as I see opportunities, I sometimes place a short bet. So I bet that the price will go down on something. And this is a special case in my portfolio at this time because I have decided to short wheat, which is a commodity. The reason why I've decided to short wheat is because I always keep a close eye on commodities. And as I said, I'm generally pretty bullish on commodities moving forward. And I've said previously, I'm expecting a commodity super cycle. That being said, recently wheat has rapidly grown in price. And I really started to dig into why this has grown in price. And there are some legitimate reasons why it has grown in price. So, for example, there were bad weather conditions in parts of the US and in Argentina and a few other places where they produce wheat, which has, reduced the supply of wheat. There are also some other factors such as inflation factors, where obviously the US dollar is becoming weaker and that is increasing the prices of commodity. Obviously, there also is a lot of demand for wheat at the moment. And another reason why I've seen that wheat has actually gone up in price is because corn has gone up in price. So corn is used to feed a lot of wild animals, such as pigs and chickens, etc. And as the price of corn has actually outpaced wheat, many farmers are actually substituting corn for wheat to feed their animals. So this has increased the demand somewhat. However, I don't think that these weather conditions will go on forever. And I think what we will see as the price of corn starts to drop, I think we will see the price of wheat outpacing the reduction in price of corn. And I think that we will see this kind of spiraling out, and I think we will see a reduction in the price of wheat. And hopefully we should profit from that. Also, I've kind of looked at something called a stock to use ratio, and that says to me that that there's going to be a potential surplus of wheat, which I think will reduce the price. And if we compare that to where we saw all-time highs previously, I think it was in 2013, the stock to use ratio is much higher right now, which shows that there could potentially be a surplus. So I think it's overvalued at the moment. That being said, I'm not betting the farm, excuse my pun, on this short-term bet. I've very sensibly allocated a small percentage of our pot to this trade. However, I think that I really try to think outside of the box and different to most investors and most traders. And I think that this can only be a positive thing for our portfolios moving forward, because I think although I will get some wrong sometimes, I think I'm going to get more right than wrong. So I think this will be a good bet moving forward. But if it doesn't work, I will hold my hands up and be public about it and say that I made a mistake, but I don't expect it to. I will hold this trade, I think, for at least a few weeks, if not slightly longer, while the futures contract remains. So that concludes my monthly portfolio review video. So thank you very much all for listening. I really appreciate all the support that I get from all my copiers and followers over the last few weeks and months, and it's really great to interact with you all on a daily basis. And I really hope that we can, in May, we can go for our 8th month in a row in profit. Thank you very much for listening, and have a good week and month ahead, and speak to you soon.